All right. Thank you guys for joining us. And thanks, JK, for the presentation to give us a crash course about what POS is. You made a very good point in your introduction that, Bitfish was founded by Wang Chun, who is also a long timer in the crypto scene. He co-founded F2 Pool back in I don't even remember, 2011? 2013. So the F2 Pool is like one of the largest and earliest Bitcoin cryptocurrency mining pools. So it's a mix of background. I think the very interesting point you made is that it's all about providing that option for investors. If you want to stake, you can stake. If you want to mine, you can go to your F2 Pool or whatever other pools. So you guys already know what Bitfish is and who JK is. So we also have Oscar pending from Canaan Creative. Canaan is a very interesting company. The founder of Canaan, Zhang Nangen, was the first person in the world that developed and delivered the first ASIC mining equipment. And ever since, you guys have been focused on making cryptocurrency mining equipment. And he named the first product Avalon, right?
Yes.
So, yeah, where did he come up with that name?
I think NG. We call him NG.
Yeah.
He really loves watching Japanese movies and
Yeah, I heard Japanese comic books.
Yeah, yes. And he got the name Avalon from one of the.
Right.
Yeah.
So since then, you guys have inherited that name, so Avalon miners.
Yes.
And we have Nishan from Bitmain, which is now the largest cryptocurrency mining makers in the world. Made $1 billion in profit in 2017, $1 billion in profit just in the first half of 2018. I mean, dominating pretty much more than 50% of the total market share. So, thank you guys for joining us. So for the POS and POW, I don't intend to make this discussion a kind of like debate which one is better than the other, because as you said, it's about presenting a choice. So I want to take it from an approach from an investor point of view. So if I'm presented with two type of investment options, POW, whether I can mine or stake it, I need to be well informed about the pros and cons, challenges, and how to evaluate. So I hope our discussion can break that down into the details. So to get it started, let's start with JK maybe. Can you tell us a little bit about the entrance barrier? If I want to invest in POS, can you give us like a step-by-step what I need to do to participate eventually?
So it depends on which route you want to take. Do you want to operate your own servers, or do you want to just simply delegate?
Right.
Delegating is very, very easy. Well, I mean, you need to learn how to use a wallet, of course, but outside of that, you just send a delegate transaction to the network, and that's it. You're just paying fees. You don't need to have to even worry about paying fees monthly through invoices. It's all being done by the protocol itself. So all you need to worry about is your tax filings, I guess.
So you can just sit on the computer and buy it and stake it.
That's basically it if you want to delegate. If you want to run your own servers, that's a different story. You need to go out there and find your really smart infrastructure engineer, because a lot of these servers, you need to put a lot of security measures around it. So you need to find the right talent. You need to buy bare metal, hardware, which is not cheap. And also, you need to really dive into the code base, the software, just to make sure you're not running into malicious. You need to also participate in the governance of it. So there's a fair amount of work when you're trying to sort of run your own validator, I guess.
Right.
Well, when you're trying to spin it up at first, I guess.
Right. So how about mining? What do I need to do?
Okay, so for POW mining, or let's say Bitcoin mining, actually it's very straightforward. So the first step is that you need to consider the Bitcoin mining equipment. Right now you have older generations Bitcoin miner, or new advanced Bitcoin miner like S17 or M20 or Avalon 10. So that's first thing the investor need to consider about. And the second is about the electricity, because it's also about the cost. And for electricity, the two things. First, you need to get very cheap electricity. And second, you need to get very stable electricity. So people will choose between hydropower or thermal power. Even some people will choose between wind power or solar power. So this is second thing people need to consider about. And the third is that people need to find very reliable the mining farm or mining site. And fourth, I think also is very important is that you need to get a very trustworthy maintenance team who can do the daily maintenance at the mining site for investors. And the fifth is that you need to connect your miners to the appropriate mining pool and then start mining. So that's basically like the steps of the Bitcoin mining.
Right, that's pretty much about like you need to buy it and you need to consider the logistic to ship the miners to the mining farm, and you have to find reliable electricity. So, Nishan, do you have anything else to add?
Sure. So mining is not is institutionalized now. So we are only talking about institutionalized mining. And a very important aspect here that is often overlooked is the regulations. So many places may have very cheap electricity, but not very friendly regulations. And then there are places with electricity that is not so cheap, but stable regulations make it a better bet. And yeah, that is a very important factor.
Just one thing to add, as you can see, sort of the entry to barrier, I think proof of stake is lower. I think that's a fact because proof of work has been around for a while, so it's, as you mentioned, institutionalized, so people know how to do this. But proof of stake is so early that is still early, but yet the entry to barrier is much lower than trying to find these rigs and then trying to find the right place to put them.
So this institutionalized mining happened a few years ago already. I mean, the days of mining Bitcoin on your laptop are long gone already, 5-6 years already. And so to fill this gap and to encourage more retail users or individuals to join the space, there is something called cloud mining, which offers people a very simple option to just go online, purchase like an email account, and start making money.
But there needs to be an off-chain trust factor to the cloud mining company, right?
Sure. Just like a node operator in a staking mechanism.
So I want to go back to how do I evaluate everything? So when I consider POS, because we were talking the other day, because you guys are like validators. Whenever there's a POS chain launched, you kind of also take on this role of due diligence, because you need to consider, do I need to support this chain? Do I want to stake for this chain? So maybe that could serve as like a reference for investors who are considering these things. So what kind of factors do you look at when you evaluate if I want to support this project?
So I'll touch on the main point and then some of the sub-points. The main point is, do we trust that this new project provides value to the ecosystem? We believe that this chain could become the next Ethereum or just a huge market cap chain. That's essential, because if it's not, then we're basically running a server for a chain that no one's going to use. So that's the main point and the hardest point by far. The other sub-points are, we also look at the token economics to see if it's fairly distributed to a lot of people. We look at the staking economics to make sure that we're able to at least sustain our validators. And we also of course, look at the community to see what sort of community it is. Is it retail investor focused? Is it developer focused? So these are sub-points, but the main point is by far the most important.
So you'll also look at the marketing enthusiasm for that, whether there has retail, people's interest in, and also VCs.
Yes, exactly. Yes.
All right. So when I decide to, stake it for a certain coin, whatever that is, so do I just stake it with the largest BP block producer? I mean, is there any other factors, other rationale that I need to take into consideration when I decide which one, if I want to delegate?
This could sort of translate into, I think, mining pools, honestly.
It's similar. There are similarities.
Do you automatically just plug your rigs to the biggest mining pool? No, not really, right?
Yeah, not
you
really.
go out to the market to talk to the mining pools.
Yeah, there are many competitive factors by which some mining pool may suit someone, some mining pool may not suit the other. Just for example, geographic regions. So some mining pool may have nodes or servers in Asia, so it's better suited for Asia. Some in Europe, like the slush pool. Some maybe in Australia. There is none in Australia. I was there in Australia last week and I realized there isn't.
So, we saw this development. So we're taking lessons from it. Meaning that it doesn't mean that being the biggest has no meaning. like it's just that you're doing something right, but it doesn't mean that you should automatically delegate to the biggest one. You need to talk with them. You need to see what type of tools they're providing. You need to see how active they are on the governance, how much they understand the software. You know, a lot of validators are open to talking, so try talking with them. Try to see qualitatively, do you like them?
Yeah, and a different type of chains, they have their very different economic design to how to incentivize. I think that is also one point you need to like talk to them and to find out how do I navigate that sort of complexity.
Yeah, so like I think you're talking about like just talking with validators to find out about like different protocols, right? Yeah, I mean this as well. Like we as having validators on different blockchains, we're able to opine on that, give advice, say like, oh, we like this about this chain, but not so much about this chain. We're able to see the pros and cons in between those and advise not only retail investors and investors, but also the projects themselves when they're trying to design their staking economics.
And also for the POW, I mean, there are sort of a lot of different mining pools. What's the trend? Do you see like most of miners just use one type of pool, or do they kind of diversify them to make sure that each one has an equal amount of distribution of my mining power, so that I can get the equal amount of luck from different pools?
I think users look at the most simple factors, which is like the ping to a mining pool's nodes. So there is not a delay when they mine a block or when they send a proof of work, because that delay could result in them losing the block to someone else who's got lesser latency. That's just one factor. And then because there's so much competition in proof of work is a very old mechanism, and mining pools have been running since many years now. That this competition has gone to the next level where customer service is very important. So these pools have customer support teams, dedicated hotlines for particular institutional miners. They even go to these institutional miners to propose special rates to particular miners. So it gets very competitive there. So there are many factors to look at for a miner. And if you're a retail miner, maybe the factors are not so many. You will probably not get a hotline or a dedicated customer support employee in these mining pools if you are just mining with one S7 or S9 miner. But then there will be other factors, like which one is closer to you, which one is user-friendly, which one has a user-friendly UI. And UI of the website or mining pool doesn't matter too much to the mining farm owners because they have a different management system that they employ in their mining farms. So yeah, there are various factors that this depends on, and they just do not go with the biggest mining pool by default.
I also want to talk about, like, besides mining pools, I mean, the first step is to get the mining equipment, right?
Yes.
So, like, Oscar, you mentioned, like, different types of machines are very, it's a first step question, what you want to buy. Can you elaborate on that? Because different type of machines with different type of mining power. I mean, the most advanced one, they can do like 50 terahashes or 60 terahashes per second, whereas you also have like older model, they can do like a 10 to 20 terahashes per second. They're cheaper, but they may have a shorter or longer payback period. So how do you explain that kind of difference to the investors?
Yes, so when investors, they consider the mining equipment, the most important thing is that they will calculate the payback period.
Right.
And so for the mining equipment, there are several factors that they consider. The first is the price of the mining equipment, that's the cost. And the second is the computing power, like how many terahash per second the mining miner can have, right? And the third is the power efficiency. And that's about the miner. Then people will also consider about the Bitcoin price and also the Bitcoin total network computing power and difficulty. Then based on, and also the electricity price. And based on these three factors, the investors can calculate the payback period, right? Then they will decide which miner they want. They want the new miners, they want like older generations, they will do the calculation.
But the new miner one, they tend to be more advanced,
Yes.
more powerful, more expensive.
Yes,
But they're also more resilient to the price of the volatility of price of Bitcoin.
correct.
So what is the difference? Like, how much lower the break-even price would that be?
So the break-even price for different miners is quite different.
Right.
For example, let's say for Havana 10, right now the break-even point price is like $3,000 or $4,000 US, right?
Right.
Like for S9 or like for Havana 8 miners, the break-even point is like maybe 6 or 7,000, something like that,
Hard
right?
to say, hard to say any one price.
So it's quite different.
Right, so you can pay for something that it costs you more, but you can still mine it even if Bitcoin drops like significantly.
Correct.
There's no payback period if you're not going to spin up your own validator on proof of stake.
But you have to lock it up. You sacrifice the liquidity.
Sure, but it's fair in that anyone could participate. If I want to mine, I'm out of my mind because I'd have to invest at least a few hundred K to actually earn any profit on proof of work on Bitcoin right now. Proof of stake, I can participate in today.
Sure.
Just buy a few atoms or tezis and then just.
But I guess like
Stake
it
it.
boils down to the price.
Founding of proof of stake is that you prove that you have a stake. And if you really want to prove your stake, you put in money that cannot be locked out. And that is a sunk cost that goes in mining.
That's the sunk cost
So
similar
it
to
lives more to the founding values of proof of stake than proof of stake itself does.
100K versus a few $10 that you just need to buy in terms of proof of stake coins.
All right. Let's talk about the challenges for POS and POW because I think like POW has been there for a long, and POS kind of, people have been talking about this year and since late last year because with the launch of EOS and Tezos and Cosmos. So for the POS, what do you think of the biggest challenge is for the whole market to grow significantly?
Education first. I think there still needs to be a lot more education. A lot of still funds, a lot of exchanges, a lot of wallets still have not come up with a proper strategy on how to tackle proof of stake. They are launching now. You'll hear a lot of announcements soon, but still, I feel like still there's at least a third of the market that is just sleeping on the wheel right now. Second is trying to make it as easy and efficient as possible. Easy in that, try to make it a one-click, easy possible way of, staking. Efficiency in that there's a lot of trade-offs I talked about earlier and trying to resolve these. There are products that are being built to solve these, but they need to roll out actually in order to make the entire staking experience efficient.
I mean, exchanges, they kind of function as a way to get around with the trade-off. Because, is that true?
It's helping users get around the trade-offs.
Right.
They are still eating the trade-offs.
So I can stake it to an exchange because for example, OKX, they're the biggest block producer for EOS because people are staking EOS on them. They can still trade off-chain.
Yeah, so when an exchange is staking and just giving you staking rewards, essentially there's two fees you're paying. You're not only paying fees for them to operate the validator, but you're also paying fees in that you're getting access to liquidity, right? And so they're at risk though. The exchange is still at risk. So I think it's helping users bypass it. The exchanges will
Right.
still eat the trade-offs.
Do you think the ultimate, I don't know if it's still the goal, but do you think the Ethereum switching to POS will be like the biggest challenge?
That I think it's without a doubt that every single validator has their eyes on Ethereum. Ethereum is the second largest market cap coin right now.
Right.
If you're not in that market as a validator, you're toast.
Right. So let's look forward to when that happens. For the POW, I mean, I do know that. I mean, I talked to Kanan and also Bitman both. I mean, the pretty big problem now is that you have huge demand of people want to buy machines, but you can't really produce that much money machines because the chip actually is controlled by your suppliers. In both of your cases, it's TSMC, Taiwan Semiconductor Manufacturing Company.
Yes.
So, how do you overcome that kind of bottleneck when you have such kind of increasing demand, but you cannot really supply?
You place more orders? I don't think this is a problem. Because with proof of stake,
But that is a big challenge for
you
you.
don't have an infinite supply of coins to buy on an exchange. If I want to lock in my coins, I go to an exchange. There's only limited liquidity there. My order, if it's big enough, may not realize for 3 months, which is longer than the shipping time of Bitmain's miners right now. So you have this limit or this bottleneck of supply even there. What I mean is this is not a problem. This is just nature of anything. When there's a high demand, there's bottleneck of supply.
I mean, is there any way to overcome that? I mean, can you? Because the problem is if you use 7 nanometer chips or 5 nanometer chips, there will be It will be more expensive.
Theoretically, you could by if we take the risk and place orders foreseeing a big demand with TSMC and the suppliers. But that is not a very good economic decision. We have to plan for the future. We can't just bet on the Bitcoin price and the demand in the future. So this bottleneck can theoretically be solved, but economically, I think the way it is now is just makes sense. For both proof of work and proof of stake, like I mentioned, there is this bottleneck of supply, which is there in any economic model.
What's your view, like Oscar? Do you think technically you could still use a less advanced chip, like say 6 nanometer, to improve the efficiency of the design to make it more powerful than it is already, launched today?
Yes, so first I agree that right now there's very high demand for the miner. And second, I think the capacity is really like a challenge right now. So as for the solutions to solve this challenge, I think there are like 2 ways. The first is that for manufacturers, we can do multi-sourcing right now. Right now, we both do like sourcing with TSMC, right? But we can also consider with like Samsung.
Yeah.
Right? That's one strategy to overcome that solution, overcome that challenge. And the second is that, as you said just now, maybe we can use like we don't compete with 7 nanometer, but we can also use 16 nanometer or 8 nanometer or 10 nanometer, right? Because for 16 nanometer, maybe we have more capacity, more wafers there. For example, right now, we take about 40% of the Nanjing TSMC 16 nanometer foundry, for 40% of their wafers. So I think yes, we do have like solutions to overcome that challenge.
Okay, and I think there is an interesting point about liquidity because in the POS you have to lock up. That's the design by default. But do you guys also see that kind of trend in the POW? Because like when you mine it, do you see the miners are actually? I mean, it's not by default that they can.
It's not by default, but it causes a upward push on the price of Bitcoin because the miners who are invested for the long term, if you are an institutional miner, you don't want to immediately sell your coins.
Yes.
Firstly, because selling it may not be as profitable right now as it was in the bull market that we saw 2 years ago. So they are hoping that kind of price will come back. And they keep holding on to their Bitcoins as much as they can. They can't hold on to all, but as much as they can. And that causes an upward push on the price, similar to locking in your coins in proof of stake.
Do you guys see that kind of like something like a very decentralized consensus? Is there kind of like a miner's mentality you guys have been seeing? Because you guys deal with them every day.
Yeah, actually, I talk with many of our clients and miners. As far as I know, that many of them they have such mind. That means they will hold as much Bitcoin as possible. Maybe they will just sell a little bit to cover the electricity bill, right? Then
or they may just pledge and borrow some money to pay the bills.
Yes.
Yeah, that too. Yeah, that too.
But so the point is like they want to hold it.
They want to hold it.
Because is it because of the halving that's going to happen?
Oh, that's a good point.
That's my thing. Yeah.
Yeah, it's halving, and everyone thinks there might be another bull market like it was before. So yeah, that causes an upward push.
Okay. One last question I do want to ask you guys. What do you think? What's your view on the regulations impact on the POS market and POW market? Which one do you think will have a greater impact on the regulatory point of view?
I'm not sure I know which one will have a greater impact. I can only say about proof of work. In proof of work, the mining pools try to base their headquarters in a place where regulations are more friendly to cryptocurrencies, because the mining farm itself, although it's a mining farm, it's not really generating some physical Bitcoins. So there's nothing being produced of value at the mining farm. What is being produced of value is at the mining pool level. So that is one way the mining pool operators and mining farm owners are working with regulations.
So I think like for Bitcoin mining industry, if you want to do very long-term business, regulation compliance is very, very important. Right now in the world, like we see Canada and the US, the Bitcoin mining is legal, right? So they can do very stable business. But in China, the regulation is not clear yet. Like in April this year, the National Development and also Reform Commission, they are seeking public opinion about a draft phasing out Bitcoin mining industry in China. But after they launched this draft, there's nothing happened yet.
Yeah, there hasn't been any update. Yeah, it's because you mentioned that electricity is a very important factor of the operation.
Yes.
So yeah, I mean definitely that's one thing if you come across a mining farm that can offer you super cheap electricity, better be careful if that's really compliant with the local authority.
I think it could be just summarized by some of the guidelines we've been seeing coming out. They've always mentioned at least a paragraph or some line about mining, but never about proof of stake.
Yeah.
Because it's fairly early for proof of stake. It hasn't been. Look, it's been stress tested for about a year now.
Right.
It's still fairly new, so there's still going to be a bit more time that's needed for regulators to actually learn this concept and warm up to it. But there are initiatives made by validators like us, by projects. There's like a group called Proof of Stake Alliance, which is where they're trying to educate the regulators in DC, the lawmakers there, to guide them on how best to set up regulations and guidelines around proof of stake. So there's movements there, but it's just too early to say there's what impact these regulations will have.
Right. We're running out of time. Thanks everyone to share your opinion on the future of POW and POS. I mean, look forward to fascinating more development.
Okay, thanks so much.
World.
Thank you.
Thank you.